Bitcoin is transformed from an obscure digital experiment into one of the most talked about financial assets in modern history. Over the past decade, it has produced extraordinary returns, created thousands of millionaires, and changed the way people think about money, investing, and wealth creation. Every major Bitcoin rally has been followed by stories of ordinary people whose small investments grew into life-changing fortunes. At the same time, Bitcoin has also experienced dramatic crashes, proving that enormous opportunities often come with equally significant risks. Today, many investors believe Bitcoin may be approaching another major turning point. The question on everyone's mind is whether the next move could once again create a new generation of millionaires. While nobody can predict the future with certainty, there are several powerful reasons why many experts remain optimistic about Bitcoin's long-term potential. In this video, we'll explore the economic trends, institutional demand, technological developments, market cycles, and global factors that could influence Bitcoin's next major move, and what every investor should understand before making financial decisions. Today, we will talk about Bitcoin's next move could make millionaires. So, before we start, make sure to hit the like button and subscribe to my channel. Understanding Bitcoin's unique value. Bitcoin was introduced in 2009 as the world's first decentralized cryptocurrency. Unlike traditional currencies issued by governments, Bitcoin operates on a blockchain, a public digital ledger maintained by thousands of computers around the world. No central bank controls Bitcoin, no government can print more of it, and no single organization owns the network. This decentralization is one of Bitcoin's strongest advantages, because it gives users control over their own assets while reducing dependence on traditional financial institutions. Bitcoin has often been compared to digital gold because of its limited supply and ability to store value over long periods. Why Bitcoin is scarce. One of Bitcoin's biggest strengths is its scarcity. Only 21 million Bitcoins will ever exist. Unlike paper currencies that governments can print whenever necessary, Bitcoin's supply is permanently limited by its programming. This fixed supply creates a powerful economic principle. When demand increases while supply remains limited, prices often rise over time. As more individuals, institutions, corporations, and even governments begin purchasing Bitcoin, competition for the remaining supply becomes stronger, increasing the possibility of significant price appreciation. The Bitcoin halving effect, one of the most important events influencing Bitcoin's price, is called the Bitcoin halving. Approximately every 4 years, the reward miners receive for validating transactions is cut in half. This reduces the number of new Bitcoins entering circulation. Historically, every previous halving has eventually been followed by substantial bull markets. Although history never guarantees future performance, many investors closely monitor halving cycles, because reduced supply combined with increasing demand has previously created strong upward momentum. Many analysts believe the full effects of recent halvings may continue influencing the market for months or even years. Institutional investors are entering the market in Bitcoin's early years. Most investors were individual enthusiasts. Today, the landscape has changed dramatically. Large financial institutions, hedge funds, pension funds, family offices, publicly traded companies, and asset management firms are increasingly allocating capital to Bitcoin. Institutional participation brings billions of dollars into the market, while also increasing Bitcoin's credibility among traditional investors. When major financial institutions invest, smaller investors often gain greater confidence, potentially creating additional buying pressure. Bitcoin ETFs changed everything. The approval of Bitcoin exchange-traded funds has become one of the biggest milestones in Bitcoin's history. ETFs allow investors to gain exposure to Bitcoin through traditional stock exchanges, without directly purchasing or storing the cryptocurrency themselves. This significantly lowers barriers to entry for millions of investors who may have been uncomfortable managing digital wallets or private keys. Easier access can increase demand substantially, because retirement accounts, investment advisors, and institutional portfolios can now include Bitcoin more conveniently than ever before. Inflation continues driving interest. Inflation reduces the purchasing power of traditional currencies over time. Many investors look for assets that may protect wealth during periods of high inflation. While gold has historically served this purpose, Bitcoin is increasingly viewed as an alternative store of value due to its fixed supply. If inflation remains elevated or governments continue increasing money supplies, Bitcoin could become even more attractive to investors seeking long-term purchasing power protection. Growing global adoption. Bitcoin adoption continues expanding worldwide. Millions of people now use Bitcoin for investing, savings, international transfers, and business transactions. Several countries have developed cryptocurrency regulations, while some governments have even recognized Bitcoin as legal tender or included it within their financial systems. Major payment companies have integrated cryptocurrency services, making Bitcoin easier to buy, sell, and spend. As adoption grows globally, long-term demand may continue increasing. The power of network effects. Bitcoin becomes more valuable as more people use it. This concept is known as the network effect. Every new investor, developer, business, financial institution, exchange, and payment processor strengthens the overall ecosystem. Larger networks generally create greater trust, increased liquidity, improved infrastructure, and broader acceptance. These advantages make Bitcoin increasingly difficult for competitors to replace. While many analysts expect another bull market, Bitcoin has experienced several major bull markets throughout its history. Although each cycle has unique characteristics, certain patterns continue attracting attention. Strong institutional demand, reduced supply after halvings, improving regulations in several countries. Growing ETF investments, expanding global awareness, and increasing adoption all contribute to bullish expectations. While nobody knows exactly when prices will rise, these combined factors create an environment that many analysts consider favorable over the long term. The psychology behind massive price moves. Financial markets are driven not only by economics, but also by human psychology. Fear and greed often amplify price movements. During bull markets, positive news attracts more buyers, creating momentum that pushes prices even higher. Rising prices generate media coverage, encouraging additional investors to enter the market. This cycle can continue until excessive optimism develops. Understanding investor psychology helps explain why Bitcoin often experiences rapid upward movements during strong market cycles. Could Bitcoin really make millionaires again? History has shown that Bitcoin has already created numerous millionaires. Early investors who purchased Bitcoin for only a few dollars witnessed astonishing gains over time. Even investors who entered during previous market corrections have often experienced substantial returns after holding through multiple cycles. However, becoming a millionaire depends on many factors, including investment amount, purchase price, holding period, risk tolerance, and future market performance. As Bitcoin's market capitalization grows larger, future percentage gains may differ from those seen during its earliest years. If you liked this video and would like to see more like it, please give it a thumbs up, leave a comment, and click the button to subscribe.